It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Australia won in 1983 the America's Cup. That really did reshape a national pride and economic momentum, including confidence in the property market. Now, one of the most interesting property stories right now is happening just outside of Perth, the coastal city of Mandurah. This has quickly become one of the hottest housing markets in Australia. It has really grown in numbers because the greater Mandurah city population is almost at, 100,000 people, and the suburb of Mandurah, it is almost 9,000. So plenty of people coming into the region.
There certainly is, and it's a great place. Just the layout of Mandurah itself, there's great infrastructure, lots of restaurants, waterways is a huge attraction. But Mandurah is so diverse. You've got Mandurah and surrounds, I should say. So you've got all your, as I said, your waterways, central living. You've got marinas. You have acreage properties. It is so diverse, and everything's within a 15-minute radius of each other, which it's a great locality.
Let's have a look at the median house price in Mandurah, currently sitting at around 620 grand. Mandurah is currently one of, as I mentioned, the strongest performing regional markets in Western Australia. Annual growth, this is interesting, house prices in Mandurah has seen a 22% increase over the past 12 months. If you look at the rental yield, the current gross rental yield for houses in the area is 4.1% with a median weekly price of $550. So all of that points to positivity.
It certainly does. Mandurah it's great value for money. It's been a little bit of a sleepy hollow up until 2021, 2022 is when it started to be seen again. And then everyone appreciated for what it is, for its tourism, etc. I think we've won the tourism award 3 years in a row. So it's the biggest day destination in Australia for tourists. It's definitely being seen now, and that's another reason why people are attracted down this way.
It is on the up and up. One of the key reasons for that is the affordability versus Perth. Entry price is significantly lower than Perth Metro, larger blocks and waterfront options, and you talk about, with good reason, that coastal estuary living.
Absolutely, yeah, absolutely. And I'll go back to those years of 2014, 2015. So Mandurah was already in an all-time low. We had a huge sellout of investors. So if you go back to 2006, so there was 32% occupancy in the Mandurah greater region, and so that means 68% of properties owned was to investors. So we had a huge 10, 12 years of selling where we predominantly just sold to owner-occupiers. So we didn't see any investors down this way. So the owner occupancy rate has now transitioned to over 70%. So there was, I think, such a lull in the market when it came to growth. You would build a home down here many years ago, and you would not, what it owed you for the land and the actual build was that if you went to sell it, was actually considerably less in value. So whereas now I think that's been seen, it's changed. The owner occupancy rate has increased. We've got so many more. There's a lot more shopping centres, schools. There's a lot more attractions here for people to call Mandurah home. It has boomed. Like, we're watching the roads fill up with a lot of people. There's all the restaurants are full again. It's such a great place to be in, and it feels great.
And this morning's spotlight is in Tamworth. It's not boom and bust. It's a consistent market. How unusual for the Australian property market to be acting in this way. The city does blend that rural charm, doesn't it, with urban convenience.
Yeah, it sure does. And there's a number of clients that we're meeting. It's certainly escalated over the last few years. People that are coming from metro locations and other larger format rural areas and settling here in Tamworth and the greater region in the Liverpool Plains area as well because of our affordability and our way of life.
How interesting it is that you've got this steady market, not the boom and bust, but the consistency. And it is pretty unusual. You know, you have a look at even some of these regional areas because people are flocking in. It does sort of change the optics of it, but you seem to be pretty steady there.
Yeah, we certainly are. I think that over the years, people have attributed investing in regional locations, chasing asset growth. And normally regional and asset growth ties itself to a large contributor to a regional area, say, for example, a mine or the Defence Force, or they go to a place and then all of a sudden houses are worth double what they were worth previous to that. And there are plenty of regional areas where they have a mine or they might have a large government presence, and that's what stabilises and grows that economy. However, places like Tamworth are very well known for that stability due to the fact that we aren't reliant on one or two heavy hitters as far as an industry is concerned. We have a number of different industries that contribute to the Tamworth and greater region economy.
There's a lot of first home buyers, Mark, that are listening right now. Can you tell us what the latest median house price is there in Tamworth and why, this is pretty important, a first time home buyer would look at moving completely out of the region that they are in, it might even be interstate, and look at buying into a Tamworth?
Yeah, that's a really good question. It comes down to the fundamentals of the job offering. So we have a number of fantastic roles here in Tamworth. So people move for work, especially if they're moving away from family. And there is plenty of work here in Tamworth available. And secondly, the median, to answer your question, is now around the $700,000 here in Tamworth. And across the board, and looking at other locations, it is still affordable for a young first home buyer couple looking to purchase an asset.
Now, this morning I wanted to do a comparison for the real estate gap between Cairns and Brisbane. Brisbane is firmly in the $1 million territory for houses, while Cairns still offers a much lower entry point. The same applies to units, but we'll take a look at the houses first. And to Cairns, the median price for a house is $727,000. The annual growth, approximately 12.1%. That represents an annual jump in your house value of just over $78,000. Rental performance. Houses in Cairns typically rent for around $635 per week with a yield of 3.4%. If we have a look at the Brisbane median house prices, yeah, look at that, $1.175 million at the moment. Annual growth 16.7% over the past 12 months, and it is worth noting that prices in Brisbane last month reached an all-time peak. Tiny homes, they are starting to carve out this niche in the real estate investing market, particularly for those chasing affordability and yield. So where do they sit, do you think, in today's investment landscape?
Yeah, well, it's funny. So the last 12 months, we've seen a massive growth in investors reaching out to us, where when we first started out, it was more the mum and dad just trying to put them in their backyard. But people are starting to see it much more of as an investment strategy, putting them in their backyard rather as an Airbnb or a dual income property. We're seeing astronomical numbers at the moment on average, even in lower socio areas, getting over $400 per week for very little spent. So, yeah, and the other benefit on that is, like you mentioned, there's a lot of equity uplift in them. Now the banks are starting to see them as an asset rather than a liability or a bit of an extra.
Yeah, those banks, I just want to pick up on that because financing a tiny home isn't as straightforward as traditional property. In fact, in many cases, they're treated more like a vehicle or even a personal asset rather than real estate, depending on how they're set up. And that can affect loan terms and interest rates. It is improving and still evolving. And as you say, the banks are starting slowly to sort of recognise, hey, there's money for us to make here. We better jump in the sector. So just how accessible at the moment is finance in this space?
Yeah, it's spot on. So 6 months ago, if you look at it, they were treating these as a personal loan or almost like a vehicle loan. And now we're actually seeing them as a 100% home loan. So as a 30-year term and just your standard interest rate. And people are even now able to withdraw the equity on their property to do it as a loan for it. So yeah, it's becoming a lot more popular with the banks. We've actually had NAB and CommBank reach out to us on various occasions. And it's really about making sure you do the process properly. So as long as you're engaging a builder for the start to finish process, pretty much as a turnkey package, and you've got all the planning done, you've got all the plans done, you've got a full written quote, they're actually, starting to take those on as a full-term home loan with no issues at the moment.
I saw something just recently from you guys, which I thought was a great idea. One of the things with a 40-foot shipping container, I mean, they're highly spec'd out. But one of the things is, if you're working from home, have you really got enough room to sort of do that? And there was this video where you've put, I think, correct me if I'm wrong, you've put a 20-foot shipping container on top of a 40-foot shipping container, and you've got the office upstairs. I thought, gee, what a great idea that is.
Yeah, that's one of my crazy new ideas. Sometimes I just can't sleep at night. I think about the craziest things and I just make them happen. So yeah, what we've did is I have one of these I stay in when I'm traveling for work, and I have the 40-foot down the bottom, which has the full bathroom, kitchen, everything you kind of need to live in. But it is a little bit tight if I'm trying to work out of my home office as well. So we have the 40-footer on the ground. And what we actually did was I built a 20-foot office and placed that up top of a crane. And then I've got a beautiful 6-meter deck as well. So it's got panoramic windows the whole way across, and it really kind of separates the living from working space. And not only that, you've got breathtaking views and a comfortable space to kind of work and then also relax upstairs as well. So yeah, it was a bit of a crazy idea, but it's worked out really well and we've had a lot of interest in that.
Grab your weekly dose of inspiration to help build a real estate portfolio. We talk to the best in the business every day. Learn from the professionals and know your property with us.
How are you navigating the terms and conditions that have been forced upon us from this Iran war conflict? Even if it all stops today, it is a nightmare to get us back to where we were pre-Iran-US conflict. And if you have thoughts on that and how you are coping with prices escalating, you can send us a voice message. We'd love to hear from you below. Or you can email us, myrealestatepodcast@gmail.com. And I see on this day, back in 1998, the FDA approves Viagra in the US. Global pharmaceutical markets changed overnight, and so did a lot of marriages. Now, big question to talk about this morning. To fix or not to fix is the question a lot of homeowners are asking themselves right now. With the cash rate sitting at 4.10% and the talk of another possible rise in May, different lenders, now they tend to respond in different ways. Some of them move quickly, others take a more measured approach. It can create confusion for borrowers trying to keep up. What is your take on how the banking providers around Australia are responding to the moment? You know, the latest rate rise from the RBA mixed in with everything else.
Yeah, well, essentially over the past week, lenders have been passing on the full 25 percentage point increase to borrowers on their variable rates. So that's lifting repayments across the market. For mortgage holders, this comes on top of the February move. So for many households, we've seen rates increase twice in a pretty short period of time, putting additional pressure on monthly budgets. And obviously just touching on what's happening with petrol prices, there's a lot of households that are really managing a cash flow squeeze at the moment. Just an interesting point as well, globally interest rates are elevated, but now Australia is essentially their cash rate is above a lot of the other countries, the USA, the Euro, China and the UK. Australia's cash rate now at 4.1% is above that. Fixed rates have also been moving higher in recent weeks as markets have been pricing in, further expected rate rises.
Yeah, and when it comes to mortgages, it does come down to those two main options that I mentioned, to fix or to use the variable rate. Each does have its place depending on timing and risk appetite, because you've got to have either one of those, but the gap between them can shift quickly, and understanding where the rates currently are is what is key in all of this. So where are the rates for both fixed and variable at the moment, since I've got you there?
Yeah, it's incredible how quick this has shifted. It was probably 3 to 6 months ago. We had fixed rates under 5%. We're now getting most fixed rates over 6%. There's some 1-year fixed rates that are still under 6% that some people are trying to lock in. But generally speaking now, the 2, 3, 4, 5-year fixed rates are now over 6%, some of them well and truly over 6%. The 1-year fixed rate sitting about 25, 30 basis points above where variable rates are sitting. But essentially, we've seen fixed rates move quite rapidly in the last couple of months. And we've also seen fixed rates move since the last interest rate rise a couple of weeks ago, and also subsequent talk about another rate rise in May. So a lot of movement on fixed rates and a lot of clients looking at what are our options? What should we do in this difficult environment?
We connect you to the best real estate information across Australia. The Real Estate Podcast.